All right. So welcome to book club. First book we're reading is Trading in the Zone by Mark Douglas. Again, I'll just be going through the chapters, highlighting some things as I read it. And then from there, you guys can talk about what you learned, what you took from it, and what you think is important. Cool. And then you can always ask any questions in the chat throughout this, and then I'll be happy to answer them at the end. So in chapter one, it starts talking about fundamental analysis. As we know, that's kind of like Warren Buffett's method of picking stocks and trades. Pretty much uses all of the financial tools, balance sheets, how much money is the company bringing in, where they see the company in the future, all of that good stuff that pretty much no trader uses today, except for Warren Buffett. Although I do think fundamental analysis can still be good, especially on some big blue chip stocks. As far as where we're at here, we're considered day traders or swing traders. So this wouldn't be the case in how we trade. In the 70s or 80s, it was shifted to more of a technical analysis, which is what we teach. That's the candlesticks, the charting, all of that good stuff. With technical analysis, it creates behavioral patterns that are observable and quantifiable, and they repeat themselves with statistical reliability. So when we say, when we're looking at patterns, we know, okay, take an evening star is a bearish reversal pattern, right? So when this happens, when you're seeing it on a chart, we can see that it repeatedly begins a bearish trend. Now, not all the time does this happen, but we see that these patterns happen over and over, and we can rely on them to give us a probable statistic. And the only reason we use this is because it gives us a greater probability, but that doesn't mean that it gives us 100%, trade. It's just a greater probability that something will happen, and understanding this will give you a greater probability of making a profitable trade. So what this technical analysis does, it keeps you focused on what the market is doing now in relation to the past, and instead of focusing on what is logical or reasonable to you, right? So you're only looking at when we say, the price action, that price action, we're talking about the technical analysis, and we are focused on what is happening now versus what we think in our mind, right? We're just focused on what the chart and the market is giving us. Moving forward. So with the technical analysis, it can turn the market into an endless stream of opportunities to enrich oneself, right? Because if we know these patterns that are repeatable and give us a greater probability, it gives us an endless opportunity of, profitable trades. Whereas fundamental analysis, you're pretty much sitting there and you have this idea of where the stock price should be, where it should go. Whereas when we're in the moment of now and looking at the trade, that gives us limited possibilities from our perspective of where the trade can go, and limited possibilities of entries and exits. So now we go to the shift of the mental analysis. This is important because we need to have a structure, because trading is all mental, right? The problem with technical analysis, if you want to call it a problem, is once you learn to identify patterns and read the market, you find there are limitless opportunities to make money. But as you sure, there can be a huge gap between what you understand about the markets and your ability to transform that knowledge into consistent profits or a steadily rising equity curve. Think about the number of times you've looked at a price chart and said to yourself, looks like the market is going up or down, as the case may be. Sorry, let me go along with this. Sorry, guys, I was meant to do this. 1 second. Get on. I think should be here. But you did nothing but watch the market actually happen, except watch the market move while you anguished over all the money you could have made. There's a big difference between predicting that something will happen in the market and thinking about all the money you could have made and the reality of actually getting into and out of trades. This difference is called a psychological gap that can make trading one of the most difficult endeavors you could choose to undertake, and certainly one of the most mysterious to master. Now, of course, trading can be mastered. And the people who have mastered the art of trading have closed this gap between the possibilities of available and their bottom line performance. But as you might expect, these winners are relatively few in number compared to the number of traders who experience varying degrees of frustration, all the way to extreme exasperation, wondering why they can't create consistent success. In fact, the difference between these two groups of traders, the consistent and everyone else, are the analogs to the differences between the Earth and the moon. So if going to the moon represents consistent success as a trader, we can say that getting to the moon is possible. The moon is usually visible every night, and it seems so close that we could reach out and touch it. Trading successfully feels the same way. But we don't have the capacity to put on a trade. Since the markets are in a constant motion, this money is also constantly flowing, which makes the possibilities for success greatly magnified and seemingly within your grasp. So what he's trying to say is, we look at a chart, we see other traders being successful, we see it, it's there, it's tangible, and we see the possibility, and we see that it is possible. But at the same time, in our heads, we see that just like the moon is so far away, we understand it's possible to get there, but the frustration of not being able to get there looms in the way. So a lot of us have fear, anger, frustration, anxiety, and disappointment, betrayal, and regret. So what separates these two groups of traders? Is it intelligence? Are the constant winners just plain smarter than everyone else? Do they work harder? Are they better analysts, or do they have access to better trading systems? Do they possess inherent personality characteristics that make it easier for them to deal with intense pressures of trading? All these possibilities sound quite plausible, except when you consider that most of the trading industry's failures are also some of the society's brightest and most accomplished people. The largest group of consistent losers is composed primarily of doctors, lawyers, engineers, scientists, CEOs, wealthy retirees, and entrepreneurs. Furthermore, most of the industry's best market analysis are the worst traders imaginable. Intelligence and good market analysis can certainly contribute to success, but they are not the defining factors that separate the winners from everyone else. So just because you can have good technical analysis doesn't mean you're going to be a great trader, right? You're going to have to overcome fear, frustration, and the anxiety. Having worked with some of the best and some of the worst traders in the business, I have helped some of the worst become some of the best. I can state without a doubt that there are specific reasons why the best traders consistently outperform everyone else. If I distill all of the reasons down to one, I would simply say that the best traders think differently from the rest, right? So the biggest thing that successful winning traders do and their mindset is having zero fear. You have to have zero fear when you trade. So winners have attained a mindset, a unique set of attitudes that allows them to remain disciplined, focused, and above all, confident in spite of the adverse conditions. So that means whatever the market is giving you, whatever is happening, you're a robot. You stay the same. You have that mindset. You have that belief in yourself, confidence, and you're trading without fear, no matter what the market is throwing at you. For example, if you get into a trade, right, you made a trade plan, you enter the trade, now all of a sudden, it's throwing you, maybe it's dipping below the support level that you had. This now can deter you and change your entire mindset of the trade, and which causes us to lose. But with these adverse conditions, you need to stay focused, have that belief in your system, the confidence without fear that you did make the right entry, and remain disciplined and focused. And I think everybody can attest, you were down, you sold for a loss, and then it shoots back up. And you always look back, you're like, I made the right trade. I made the right trade. Well, this is it. You have to have the right mindset when you enter a trade, and do not let anything else come in the way of finishing that trade plan out. Um, just as people learn proper techniques for swinging a golf club or tennis racket, their consistency or lack of it will without a doubt come from their attitude. So no matter how good you are, it's always the attitude and your belief system that will carry you through the way. So when you put on a trade, can you consider yourself a risk taker? Now, obviously, I think a lot of us would consider ourselves risk takers, but do most traders really believe they are taking a risk when they put on a trade? Have they really accepted that the trade has a non-guaranteed probable outcome? Furthermore, have they fully accepted the possible consequences? And I believe that most traders haven't, right? So we can say that we accept risk. We can say that, you know, we accept the outcome, but when the trade starts to go south a little bit, what happens? We're not accepting that outcome. We're going to start blaming the market. We're going to start blaming everyone else but ourselves, right? So we have to fully accept that there's going to be losses in our trades. We have to accept the risk that's involved in a trade. You know, not every single trade is going to pan out to be profitable. Not, you know, trades are a non-guarantee. It is a zero-sum game. There's no guarantee that you will be profitable. And this is where we have to start being truthful with ourselves. We have to, you know, understand that we're playing a, you know, something that is not guaranteed every single time we enter a trade. The risks inherent in trading do not cause the best traders to lose their discipline, focus, or self-confidence. So again, you know, when we enter a trade and it starts to go red, we start to fear, right? We start to lose discipline and focus and that confidence. But the successful traders before entering that trade have already accepted that risk and those outcomes. Trading presents us with a fundamental paradox. How do we remain disciplined, focused, and confident in the face of constant uncertainty? Learning how to redefine your trading activities in a way that allows you to completely accept the risk is key to thinking like a successful trader. So when we talk about learning how to trade for your style, and I talk about learning how to trade for your personality, this is what I mean. You have to understand what you're willing to risk, what you're willing to lose in order to be a successful trader, right? You can't, we can't have a trading strategy that doesn't align with our personality. If we can't accept that risk when we enter our trades, you know what I mean? We're not going to be successful. So you have to understand, you know, what kind of trades you make so that you won't have this fear when you trade, which will be different for everybody. You know what I mean? Some people like to be a bull and they like to ride things up, whereas others, they feel more confident taking, you know, rejects and puts at the top. You have to understand what is your trading style to where you can trade without that fear and understanding the risk. Faulty attitudes that foster fear instead of trust and confidence need to be left out the window, right? We have to have a winning attitude. We have to have a confident attitude. This is where we begin to be successful. And I think the best quote from this first chapter is, the best traders aren't afraid. Best traders aren't afraid. When you are fearful, no other possibilities exist, right? So when you put into your mind, you know, oh, I'm going to lose, you're fearful of losing, those are going to be the outcomes that happen, because those are the possibilities that you're putting out there that are going to happen, instead of the possibility that you're going to have a winning trade. The only thing you're putting out there is that you're going to have a losing trade. So it starts with a winning attitude without fear. The hard, cold reality of trading is that every trade has an uncertain outcome. Unless you learn to completely accept the possibility of an uncertain outcome, you will try to either consciously or unconsciously to avoid any possibility you define as painful. In this process, you will subject yourself to any number of self-generated costly errors, my bad. So again, every trade has an uncertain outcome, and you have to accept that possibility. When you don't accept that possibility and you instill fear in yourself and you're trading, then you're going to try to avoid the pain of losing. And when you try to avoid the pain of losing, just like when you get messed up by the price action and you take a loss on a trade and it shoots up, you generated that costly error. It wasn't the market, it was you. So again, we have to understand that trading is uncertain and the outcomes are uncertain. It will feel like you can't trust the markets, but in reality is you can't trust yourself. So it is never the market's fault, guys. It is just that you can't trust yourself in the trade. The market is neutral. It does not care about you. It does not care about anybody else. It moves constantly and it doesn't, it is what it is. So in reality is that you can't trust yourself. So begin to trust yourself and be confident in your trading plans and your strategy. So you have two choices. You can try to eliminate risk by learning about as many market variables as possible, which a lot of people do, right? When you lose, you're like, oh, it's about learning more about the market, learning more about technical analysis. Or you can learn how to redefine your trading activities in such a way that you truly accept the risk and you're no longer afraid. So I'll say that one more time. You can try to eliminate risk by learning about as many market variables as possible, or you can learn how to redefine your trading activities in such a way that you truly accept the risk and you're no longer afraid. So again, you have to understand the risk and truly accept it and not be afraid of outcomes. I know I keep hammering this in, but this is the very beginning of being a successful trader. This is hands down the most important part and the beginnings and workings of becoming a successful trader. If you can't trust yourself to be objective and to always act in your own best interest, achieving consistent results will be next to impossible, right? So if you can't trust yourself, and that means you're not going to allow yourself to act in your own best interest. You're not going to, when you make a trade plan and you get messed up and you don't follow through, you're not acting out in your own best interest, and it's not going to create consistent results. And that is my summary of chapter 1. I think maybe I'll just stop per each chapter and then give you guys the floor and you can ask questions or take or if you want to converse about what you learned from the chapter. So I'll give it, if you have any questions, the floor is yours. If not, I will go ahead and start with chapter 2.
Can I go ahead and talk?
Yeah, absolutely.
Okay, yeah. So man, I'm pretty new to your guys' site, and I've been trading for a while and really have not done very well at it. And this book really brought out just a lot of the errors that I've been making mentally. Like it really hit me hard. Like, wow, that's exactly what he said in that book is like exactly what I've been doing. I've been getting emotionally involved in trades, thinking I know where the market's going and, thinking I'm being smart about it. But, what it comes down to is like, I just haven't really been disciplined in my attitude and just, taking responsibility for myself. So
Yeah.
this was huge for me. I mean,
This is awesome.
I really enjoyed it. It was really good. It's completely just made me think about how I'm trading totally different. So
Have you I know it seems like you just read it. Have you seen any success recently? Any trades from reading the book?
yeah, I mean a little bit. Like honestly for me, I was kind of doing the same thing that he was talking about, just kind of getting in a trade, holding it too long, watching it go down, and then being like, oh, being upset that you lose money, and then trying to get another trade to make money, or that kind of thing, and then
Mm-hmm.
getting out of a trade too early, and then being upset that you could have made more money. And so what I've kind of practiced, with being in this group and just with this book is just being try to do it without emotion and just try to follow kind of like the levels that you guys are talking about. And when it works, you make money, and when it doesn't, you get out. And so that has been very helpful for me, for sure.
That's
So
awesome.
I've seen a little bit of success. I do have like a 9 to 5 job. I'm a
Okay.
trainer, so
Oh,
I'm with
nice.
clients. I'm with clients all day, so I'll get some gaps here where I can trade. But it's hard to get consistent time to, where I have like 2 or 3 hours off where I can just watch the markets.
Yeah.
But when I have been able to do it, yeah, it's definitely been way more consistent for me.
That's awesome. So
So
you would say that taking the emotion out of it and just kind of just following the plan has kind of is better trading for you, better
yes,
results.
yes, like 100%.
Awesome.
I've only been doing it for the last week or so since I've been in the group, like really kind of monitored, and
You're
I'm
welcome.
definitely up.
Yeah.
I'm not up a ton because I didn't start with a lot, but
Yeah.
um, but yeah, I think it's working. So it's definitely been pretty consistent, and I'm watching the homework and all the videos you guys put out, and that's helped a ton too, because it's actually given me something to base my trades off of.
That's, yeah. I mean, that's the point. Yeah. We want to help you as much as possible.
Yeah, I mean, I'm drinking from a fire hose a little bit because I haven't, a lot of that information I'm not super familiar with,
Okay.
but I mean, I am a little bit, but not to the extent that you guys are putting it out there. You guys are putting it out there like so quick and talking about it so fast. Like I have to go back and process a
Okay.
lot of
Well,
that.
yeah, knowing that, yeah, we'll see if I can like kind of start a series where I just break down like just all the basics again for you guys so that we can kind of start from square one.
Yeah,
Definitely.
I
Definitely
appreciate it, man. I'm loving it. So you guys are doing a great job.
awesome. Thank you. I appreciate it, Paul.
Yeah, I'm gonna be on for like 20 more minutes, and then I got to bounce. I have a birthday party to go to, but just wanted to put that out there. So
No worries. I thank you. Thank
yeah,
you. Thank you for joining.
thanks.
Awesome. That was cool. Yeah. So again, like as you can see there, the results can, what this book is talking about is definitely something to take to heart and put into your trading. All right. I will, nobody else, I will go ahead and start with chapter 2. The lure and dangers of trading, the attraction. So in this chapter, obviously the it's chapter I'm going to go by relatively quickly instead of reading through it. In this chapter talks about the attraction. Obviously, you can kind of get notoriety. You have a freedom of creative expression, the money, all of that comes into why trading is attractive, being your own boss, all of that. Trading gives you unlimited possibilities and the unlimited freedom to take advantage of those possibilities, which is something that that I think all humans innate, want to do. When we're growing up, we are, society creates a structure for us. And as a child, for example, it starts when we're like a child and a baby. And in this book, it gives an example of, you're a baby, you see a nice vase, whatever brings your attention to that, you start crawling to the vase. And then you get up on your feet, push yourself on the table and go to try to reach for the vase. And then your parents yell, no, don't do that. You know what I mean? So society is putting this structure on you, right? But when society puts this structure on you, there's things that we inherently want to do, right? We naturally want to go do these things. And we're told our whole lives, no, you can't do that. You can't do this. You can't do that. For example, by the time you're 18 years old, you hear these statements over and over again. No, you can't do that. You can't do it that way. You have to do it this way. Not now. Let me think about it. I'll let you know. It can't be done. What makes you think you can do it? You have to do it. You have no choice. So now, this is kind of getting into more of the psychological part of just human nature and trading in this at this point in this chapter. So, when we're denied our impulses or experiences, it starts to create, frustration. It can create depression, fear. And so when we go into trading, we have no structure. You have to create that structure for yourself. And when we're going through life and we see that structure has caused us emotional damage, depression, fear, all of that negative stuff, we don't necessarily want to create a structure, right? And then when there's structure in society, we can easily blame that structure for our shortcomings, oh, well, I wasn't allowed to do that, so that's why I'm not doing this. The structure is in place, so it's easily you can blame that society structure for your negative feelings. But in trading, right, there is zero structure. You're the one who creates it. So in a world where we're trying to be free of structure, we naturally don't want to create this structure for ourselves because we relate structure with suppressing our natural impulses. So it kind of creates this paradox and creates, this reasoning. Because when we say create the rules, right? People have their rules in trading, and you have your rules and you keep breaking them over and over and over again. This is what that stems from. We naturally do not like structure because we relate it to negative experiences. So while we see that the rules work, our entire lives, we have negative feelings towards structure. So that's why we don't stick to our rules or stick to the structure that we created. To operate effectively in a trading environment, we need rules and boundaries to guide our behavior. It is a simple fact of trading that the potential exists to do enormous damage to ourselves, damage that can be way out of proportion to what we think is possible. There are many kinds of trades in which the risk of loss is unlimited. To prevent the possibility of exposing ourselves to damage, we need to create an internal structure in the form of a specialized mental discipline and a perspective that guides our behavior so that we always act in our own best interest. So again, going back, we need to act in our best interests, and creating a structure does this for ourselves. The structure has to exist within each of us because unlike society, the market does not provide it. So again, this is why we have to create a structure and a set of rules that have our own best interests in play, right? This is why we create rules. This is why we create a structure for ourselves in the market, because we are trying to have our own best interests. When we have zero rules in a market with zero structure, this is not in our best interest, right? Moving forward, no matter how good a trade looks, it can lose. So consistent losers do almost anything to avoid accepting the reality that no matter how good a trade looks, it could lose, right? You could sit there all day long and the setup is perfect. I mean, we could be basing on support for 4 hours. All of the wicks are to the downside. Everything looks up, everything looks like we're going up, and the trade fails. So we have to accept that reality that no matter how good of a setup we have, that it can fail, right? There's no such thing as a guarantee in trading. When you gamble, say blackjack, for example, there's a beginning, middle, and end. There's rules, there's structures. When it comes to trading in the market, there is no beginning, middle, and end. You are the one that creates the beginning, middle, and end. Therefore, that is the reason why you have to create a set of rules and structure that is in your own best interest. This is why this is a little bit different than gambling, because if you play blackjack, you have the rules, right? Put the cards out and put the next set of cards out. You can hit, there's a set of rules, there's beginning, middle, and end. And the market is continually flowing, it's continually going, and you're the one that creates those rules. So that's why you have to create the ones in your own best interest. The structure we need to guide our behavior has to originate in your mind and as conscious act of free will. This is where the many problems begin. So the first problem is the unwillingness to create rules. I'm gonna grab a drink of water. So the first problem is the unwillingness to create rules. And I'm gonna kind of read this a little bit. I have not yet encountered a person interested in trading who didn't resist the notion of creating a set of rules. The resistance isn't always overt. Quite the contrary. It's usually very subtle. We agree on the one hand that rules make sense, but we really have no intention of doing whatever is being suggested. The resistance can be intense and it has a logical source. Most of the structure in our minds was given to us as a result of our social upbringing and based on choices made by other people. In other words, it was instilled in our minds, but did not originate in our minds. This is a very important distinction. In the process of instilling structure, many of our natural impulses to move, express, and learn about the nature of our existence through our own direct experience were denied. So again, talking about, the baby example. Many of these denied impulses were never reconciled and still exist inside of us as frustration, anger, disappointment, guilt, or even hatred. So this is, again, where we get these feelings of a structure and rules, from society, and it can translate into your trading and why we, agree rules are important, but a lot of us don't follow our rules or structure. The need for rules make perfect sense, but it can be difficult to generate the motivation to create these rules when we've been trying to break free of them most of our lives. So again, everything I've been talking about, always trying to break out of these rules that deny our natural impulses. Problem number 2, failure to take responsibility. We may want the freedom to make choices, but that doesn't mean we are ready and willing to accept the responsibility for the outcomes. So while trading gives us that freedom, right? And we love it, we love freedom to do what we want. Are we really ready to accept the responsibility for the outcomes? A lot of us aren't. We're going to blame the market. We're going to blame this and that for the outcome. We're not going to take the responsibility that comes with freedom. The hard reality of trading is that if you want to create consistency, you have to start from the premise that no matter what the outcome, you are completely responsible. So even if the trade fails, you are responsible for it. If you profit from the trade, you are responsible for it. If you don't enter the trade, if you enter the trade at a loss, everything you do is your responsibility, and you need to accept that fact. Problem number 3 is addiction to random rewards. Now, this is a pretty good one. They did a psychological study on a monkey. If you give someone, rewards for a consistent task, they're going to keep doing them to receive that reward. But as soon as that reward stops, doing those tasks stop, right? So say we gave the monkey, treats for whatever task we want it to do. It keeps doing those tasks. Now it does that task, we don't give it the treat. It says, okay, whatever. Then it does a task again. We again don't do the treat. So now they're going to stop doing the task, right? Because they're not getting a reward for it. But here's the interesting thing about this. If one is given rewards at random, so if we give the monkey or people rewards for doing tasks at random with no structure, guess what? The monkey and the people will continue to complete these tasks, right? So they will continue to do these tasks when the reward is random, which is a very interesting psychological thing that our mind does. So when there's structure and rules and we experience like loss over and over, we say, we're not going to do this anymore. When we're not getting the reward anymore. But when the reward is random, we actually stay doing the task forever. In addition to random rewards, is particularly the troublesome for traders because it is another source of resistance to creating the kind of mental structure that produces consistency, right? The problem with any addiction is that it leaves us in a state of choicelessness. To whatever degree the addiction dominates our state of mind, to that some degree, our focus and efforts will be geared towards fulfilling the object of that addiction. Other possibilities that exist in any given moment to fulfill other needs, like the need to trust ourselves and not to subject to too many of our assets to risk, are either ignored or dismissed. We feel powerless to act in any other way than to satisfy the addiction. So it's just like when you first start trading, or, you don't have rules or structures or trade plans or anything in place, a strategy, and you just trade. You hit it big, you won, right? And then you keep trading, you're winning, then you lose. And you're just kind of, throwing money into the market. It's a random system that you're doing. And then sometimes you win, sometimes you lose. In this way, it creates an addiction to the reward, to the win. And it's going to cause you to not create that strategy and not create the structure and the rules needed in order to become consistent. So this is another thing that plagues a lot of traders, is that random reward, that random profit that they receive. Sometimes they win, sometimes they lose, but at the end of the day, there's no rule structure that they've given for themselves. So it's a toxic cycle of trying to get this random reward, which leads to not creating your rules and structure. Very interesting psychological fact that our brain does for ourselves, which causes us to be inconsistent traders. The next problem is called external versus internal control. Our upbringing has programmed us to function in a social environment, which means we've acquired certain thinking strategies for fulfilling our needs, wants, and desires that are geared towards social interaction. Not only have we learned to depend on each other to fulfill those needs, wants, and desires, we cannot fulfill completely that we cannot fulfill completely on our own. But in the process, we've acquired many socially based controlling and manipulating techniques for assuring that other people behave in a manner that is consistent with what we want, right? So we kind of, everyone's a little manipulative, we kind of do these things to get what we want, right? I think everybody has this. It's a natural instinct, we want what we want, and we kind of do things so that we can get that. When it comes to the market, there is no structure. You cannot manipulate the market into giving you what you want. So pretty much what this is talking about is everything we've learned in society, all of our upbringings, is actually going to be the opposite in thinking for trading. This is one reason why there are so many problems and why so many people cannot become consistent in trading, because they relate to what they do in society and their upbringings to the market, when that is something you can't do, right? Society has these structures. The market does not have these structures, right? You cannot manipulate an unstructured thing. One of the principal reasons so many successful people have failed miserably at trading is that their success is partially attributable to their superior ability to manipulate and control the social environment to respond to what they want. So say you have a retail store, right? You can do advertising, you can do this and that. You can kind of control the narrative, which will control the success. To some degree, all of us have learned or developed techniques to make the external environment conform to our mental or the interior environment. The problem is that none of these techniques work with the market. The market doesn't respond to control and manipulation. Instead of controlling our surroundings so they conform to our idea of the way things should be, we can learn to control ourselves. Then we can perceive information from the most objective perspective possible and structure our mental environment so that we always behave in a manner that's in our own best interests. So again, the market, we cannot manipulate the market or control it into a winning trade, right? Whereas in society, there are ways to manipulate and control into getting things that you want and going your way. But in the market, this doesn't work. So no matter what you do, we have to accept that we are the ones that are in control, and we are the ones that decide whether we have a winning, whether we have a consistency in our trading, right? It's not the market. We can't control that. It's controlling ourselves and understanding, making our roles, creating our structure, having our best interests in place, right? And that is the end of chapter 2. Is there anything anybody would like to say, add to that? The floor is yours. Okay.
Yeah, I have
Oh, yeah.
one question.
Absolutely.
So I'm just curious, like on the addiction to the random rewards, because that's kind of like fascinating to me. It makes good sense. But so, I mean, what do you do? Do you just, I mean, because if you do one good trade, obviously you want to do another good trade. If you do a bad trade, you might be scared to do them. But like, do you say I'm only taking X number of trades per day, regardless of what happens? Or it talks about rules. I mean, do you like if I do 2 bad trades, I try to not do anything else that day. I just watch and maybe paper trade or something like that. But how do you work that through that to keep from getting addicted to the rewards of doing that home run?
I mean, I just try to stay consistent with my trading. So if you stay consistency with your rules, then you're not going to break that randomness, right? So if you have that, if your rule is you have 2 losing trades that day and you stop trading and you stick to that, though when you do have winning trades, it's not by random, because you're sticking with the same strategy and the same way of trading. And understand, every trade there's going to be losing trades. So when you're sticking with the consistency of the same trading plans, same setups over and over and over again, then that is, the rewards aren't random, if that makes sense. It's when you don't have any rules and no structure and you're just throwing in, the different trades all the time. That is when, the rewards are random. So that's what it's talking about. I could actually, I'll read this particular part. It's only like 4 paragraphs. So I'll read the entire thing real quick. Several studies have been done on the psychological effects of random rewards on monkeys. For example, if you teach a monkey to do a task and consistently reward it every time the task is done, the monkey quickly learns to associate a specific outcome with the efforts. If you stop rewarding it for doing the task within a very short period of time, the monkey will simply stop doing the task. It won't waste its energy doing something that has now learned it won't be rewarded for. However, the monkey's response to being cut off from the reward is very different if you start out on a purely random schedule instead of a consistent one. When you stop offering the reward, there is no way the monkey can know that it will never be rewarded again for doing that task. Every time it was rewarded in the past, the reward came as a surprise. As a result, from the monkey's perspective, there's no reason to quit doing the task. The monkey keeps on doing the task even without being rewarded for doing it. Some will continue indefinitely. I'm not sure why we're susceptible to becoming addicted to random rewards. If I had to guess, I would say that it probably has something to do with the euphoria-inducing chemicals that are released in our brains when we experience an unexpected pleasant surprise. If a reward is random, we never know for sure if and when we might receive it. So expanding energy and resources in the hope of experiencing that wonderful feeling of surprise again isn't difficult. In fact, for many people, it can be very addicting. On the other hand, when we expect a particular outcome and it doesn't come about, we're disappointed and feel bad. If we do it again and get the same disappointing outcome, it isn't likely that we will keep doing something we all know will cause us emotional pain. So for me in that question, how I overcome it is, I know with back testing, journaling, I know that my strategy, when I take out any emotions from it, I become consistently profitable, right? So you're going to have to kind of back test and go back and make sure that your strategy is one and your rules are good and profitable. And when you're confident and understand that, then that's when you can keep going even in the face of losing. So you want to add anything to that?
No, I'm like when I read this, I'm trying to understand. Okay, is the random reward a good thing or a bad thing? And I couldn't
Oh
wrap
no,
my mind.
the random rewards are a bad thing. The random rewards are a
Okay,
bad thing because
okay,
yeah, the random rewards are a bad thing
thank you.
because when you're trading and you because it relates to, you know, when you're when you throw in when you have no rule, strategy, or structure, you're trading by random, right? And then you win. So it goes back to like when you win, you know why you won, right? You know you won because of your strategy and what you did. But if you don't understand that and you're just throwing money in the market and you win randomly without understanding why you won, that creates a big problem. So now that
Uh,
creates you just doing random trades without no structure behind it because
oh
you
yeah,
randomly have that reward.
I got it now. That makes perfect sense now.
Sorry, I had to talk
Um,
through it to yeah to try to explain it better myself.
thank you.
Yeah, no problem. That was a great question. Yes. So, and that is the end of chapter 2. Chapter 3 is the weeks is we'll start now. And chapter 3 title is Taking Responsibility. Although the words taking responsibility sounds simple, the concept is neither easy to grasp nor easy to put into practice in your trading. We all have heard the words and been confronted with the need to take responsibility so many times in our lives that it is easy to take for granted that we know exactly what that phrase means, especially when it comes to trading. Taking responsibility in your trading and learning the appropriate principles of success are inextricably connected. You have to understand with every fiber of your being the ways in which you are and not responsible for your success as a trader. So I think this kind of answers your question too. You know, you have to understand, you know, why you're successful, right? In order to take responsibility for your losses. Shaping your mental environment. If you want to create a new version of your personality that expresses itself as a consistently successful trader, you have only your beliefs and attitudes. The medium of your artistic endeavor will be your mental environment, where, with your desire to learn, you can restructure and install the beliefs and attitudes that are necessary to achieve your ultimate goal. And now we're assuming your ultimate goal is consistency. If you're like most traders, you don't realize the fullest potential of the opportunities available to you. To realize more and more of the potential to make it, to realize more and more of that potential to make it more and more of a reality in your life, your primary goal has to be learn how to think like a consistently successful trader. So it all starts with your mental, your belief system, and your attitudes, right? Your attitude not being fearful, your attitude of being confident, like we talked about, you know, in the first chapter, and then your belief system, right? You believe in your rules. You believe in your strategy. The mindset has a number of components, but the bottom line is that successful traders have virtually eliminated the effects of fear and recklessness from their trading. However, eliminating fear is only half the equation. The other half is a need to develop restraint, right? The restraint is, you know, not being reckless in your trading. Instead of learning to think like traders, you know, if we start from the premise that to create consistency, traders must focus their efforts on developing a trader's mindset, then it is easy to see why so many traders don't succeed. So instead of learning to think like traders, they think about how they can make more money by learning about the markets. It's almost impossible not to fall into this trap. There are a number of psychological factors that make it very easy to assume that it's what you don't know about the markets that causes your losses and lack of consistent results. So it's not about how much technical analysis you know. It's not about any of that. It always starts with your belief system and the attitude you have towards the market. The consistency you seek is in your mind and not in the markets. It's attitudes and beliefs about being wrong, losing money, and the tendency to become reckless. When you're feeling good, that cause most when you're feeling good, that cause most losses, not technique or market knowledge, right? So it's always your belief system, your attitude of, causes your losses. It's not the market, right? The market cannot cause you loss when you are the one that creates that structure, right? And again, you're the one that enters the trade. You're the one that controls that trade, which is the middle, and you're the one that controls the end of that trade, which is the exit, right? It's not the market that does that. It's always you. The market is neutral. It's constantly flowing and moving. So it is always you that is going to be the one that causes your losses. Attitude produces better overall results than analysis or technique. Of course, the ideal situation is to have both, but you really don't need both. Because if you have the right attitude, the right mindset, then everything else about trading will be relatively easy, even simple, and certainly a lot more fun. So, I mean, if you guys look at me specifically, I try to break trading down as simple as possible, right? I'm just using these levels, these support and resistance zones, to take my trade, right? I don't have all these lines and all these other technical indicators on my screen. But what I do have is my confidence in my strategy, my belief in a winning strategy, right? I don't have fear when I trade. And my attitude is that I'm going to have a winning trade. I don't enter into a trade, oh, I'm going to lose. I enter into it, with the belief that I'm going to win. So it's not about how much you know about the market. It's all about your attitude and belief first. Most traders are closer to the way they need to think when they first begin trading than any other time in their careers. And I think a lot of us can attest to that, right? You first start trading, you can hit a number of good trades. And that's because you have no fear. There's nothing, you don't have a belief system that's going to cause you to lose, right? You don't have attitudes that's going to cause you to lose, or, a fear of losing money and stuff like that. You just, you have that confidence you're going to make money. Many people begin trading with a very unrealistic concept of the inherent dangers involved. This is particularly true if their first trade is a winner. Then they go on to their second trade with little or no fear. If that trade is a winner, they go on to the next trade with even less concern for what would otherwise be the unacceptable possibility of a loss. Each subsequent win convinces them that there is nothing to fear and that trading is the easiest possible way to make money, right? When you begin trading, you have no fear, right? You can continue to go. This lack of fear translates into a carefree state of mind, similar to the state of mind many great athletes describe as a zone. So again, this lack of fear translates into a carefree state of mind, similarly to the state of mind many athletes describe as a zone, right? So when you're an athlete, this is why a lot of people compare trading to being an athlete, right? They have no fear. They don't second guess themselves. They've already weighed the consequences and, alternative, realities that can happen from what they're doing. They don't think about that. They just do it, right? They just perform. There is no fear in their mind. They only have that belief and attitude that they are a winner. And that's what produces consistent winners. And that is what people consider the zone you put yourself in, right? Even though you cannot force yourself or will yourself into a zone, you can set up the kind of mental conditions that are most conducive to experiencing the zone by developing a positive winning attitude. That's what the great athletes have, a winning attitude that allows them to easily move beyond their mistakes and keep going. Others get bogged down in negative self-criticism, regret, and self-pity. Not many people ever develop a positive winning attitude, right? We start to lose, we start to do this and that, we're losing money. And now our mindset is definitely not going to get us in the zone because we created a negative mindset, right? We self-criticize. We regret that we didn't get into that trade. We start to blame ourselves. And doing that will most certainly not give you that winning attitude or the belief system that you need to become a consistent trader. If a few winning trades can cause you to enter into the kind of carefree state of mind that is an essential component to your success, but is not founded on the appropriate attitudes, then what you have is a prescription for extreme misunderstanding about the nature of trading that inevitably results in both emotional and financial desire. Putting on a few or more winning trades does not mean you have become a trader, but that's the way it feels because it taps into our state of mind that only the most accomplished people experience on a consistent basis. The fact is, you don't need the slightest bit of skill to put on a winning trade, and it's possible to put on a winning trade without the slightest bit of skill. It is certainly possible to put on another and another. So we can keep putting on these winning trades, even, just because you have the skills doesn't mean you're going to have a winning trade, right? This is why you're like, oh, they just started trading. How come they're winning in so much? Well, they don't have that negative attitude. They don't have that self-criticism on them yet, right? They only see winning. So they have that winning attitude. They don't have the fear. They have that belief system. It starts with the belief and attitude. And that's why you see, people who are new to trading who are winning. And then you've been trading forever and it seems like you're not winning, right? But you've been doing it, everything. This is why it always breaks down to your belief and attitude. The point I'm trying to make is that winning in any endeavor is mostly a function of attitude. Now, most are certainly aware of this, but at the same time, most people don't understand the significant part attitude plays in their results, right? If the opponents are not evenly matched in the skills department, the one with superior skills usually, but not always, wins. When an underdog beats a superior opponent, what's the determining factor? When two opponents are evenly matched, what's the factor that tips the balance one way or the other? In both of these cases, it's always going to be the attitude, right? It's always going to be your attitude. So the analysts, when we talked about the analysts can be the best analysts in the world, but the worst traders, that's why we say, economists know everything, but they're honestly the worst traders ever. The analysts have the skills, but they don't have the winning attitude. They're operating out of fear. The novice trader experiences the feeling of a winning attitude because he's not afraid. But that doesn't mean he has a winning attitude. It only means he hasn't experienced any pain from his trading activities to make him afraid, right? So that means the novice trader, they haven't experienced that loss, so they haven't developed that winning attitude. We naturally, when we do something without pain or loss, we're obviously going to have, you could say, a winning attitude, but that doesn't mean we've developed one, because what happens, with the novice trader when they start losing is now they have that attitude quickly changes and that fear creeps in, and now the whole attitude is of fear, right? So we have to develop this winning attitude over time. When we react to a loss, we have to accept the risk, right? We always have to accept the risk of the loss. So now suppose you haven't completely accepted the risk. What if the expectations didn't take into account any market behavior other than what you wanted? From this mental perspective, if the market doesn't do what you want, you're going to feel pain, emotional pain. Expectations are mental representations of how some future moment in the environment is going to look, sound, feel, smell, or taste. Depending upon how much energy is behind this expectation, it can hurt a lot when it is not fulfilled, right? So that's kind of like, oh, well, the A+ setup, right? This has to be a winning trade. We have that expectation and then we lose. And doing that inadvertently creates feelings of pain, emotional distress, which now creates a losing attitude, right? The bottom line is this: adults, as when we get into a trading mode, we don't realize how natural it is to associate the instantaneous shift from joy to pain that we experience so often as children with the same instantaneous shift from joy to pain that occurs when we trade. The implications are that if we haven't learned to accept the inherent risks of trading and don't know how to guard against making these natural connections between our past and the present, we will end up blaming the market for our results instead of taking responsibility for them. So don't feel bad. We all do this, right? Like it talks about, this all has to do with our upbringing, how society shapes us, the structures, right? It's easy, when we have joy, we're winning, and then we have a losing trade and we experience pain. It's easy to not, to just go into the pain, right? And it's easy to put off that blame onto the market because, again, we used to always put off blame into society and everyone else that caused the structure for us to essentially lose at life. But this is not the case. It is always your responsibility. Society may work this way, but the markets certainly don't. In society, we can expect other people to behave in a reasonable and responsible ways. When they don't, and if we suffer as a result, society makes remedies available to rectify the imbalance and makes us whole again. The market, on the other hand, has no responsibility to give us anything or do anything that benefits us, right? So that talks about, somebody's acting out or somebody hurt you, you can call the police, file a claim, all of that good stuff, right? We expect other people to be reasonable and act in a certain way. So a lot of us take this to the market and trading. We expect the market to act in a certain way, to be reasonable, right? It's an A+ setup. It should produce profits. And then when it doesn't, we easily blame the market because in society, we can easily do that to others because they're not acting in reasonable or responsible ways. Remember, the market has no responsibility to give us anything or do anything that benefits us, right? The market is essentially lawless. It works on its own. It's neutral. It doesn't owe you anything. If the market is a group of people interacting to extract money from one another, then what is the market's responsibility to the individual trader? It has no responsibility other than to follow the rules it has established to facilitate this activity. The point is, if you have ever found yourself blaming the market or feeling betrayed, then you have not given enough consideration to the implications of what it means to play a zero-sum game. Any degree of blaming means you have not accepted the reality that the market owes you nothing, regardless of what you want or think or how much effort you put into your trading, right? So no matter how many hours you study, you could study, not sleep and study for 24 hours a day and go to trade, right? Market still owes you nothing. You could be the smartest person and know every single strategy there is, know every single kind of candlestick formation there is. The market still owes you nothing, right? The only thing the market does is to facilitate trading, right? To facilitate the trades between people. Remember, the market is made up of individuals like you and I, all trying to take money from each other, right? So it's a battle between individual and individual. This is why you have to take responsibility for yourself and your actions. This is not the market, right? The market does nothing. The market has no responsibility. All it does is to facilitate transactions, not to give you what you want, no matter how much you know or how much effort you put into the trading. Now, I know this causes a lot of emotional distress, right? You're like, man, I studied all night. I did all of this. And then you expect, we usually expect for our hard work, which we've been trained is that we get something out of it, right? We're deserving of something. Well, when it comes to trading, you deserve absolutely nothing every time you trade, right? It owes you nothing. Taking responsibility means acknowledging and accepting at the deepest part of your identity that you, not the market, are completely responsible for your success or failure as a trader, right? So you have to understand that it's you, not the market, that is responsible for your success, right? This is where a lot of people, you need to take responsibility in order to be successful, right? You need to take action. You can't just, play victim all the time. And I think this goes into life itself as well, right? We have to take responsibility and action for ourselves, no matter what somebody else does. However, if you ever find yourself blaming the market and feeling betrayed, that is essentially what you are doing. You are expecting the collective actions of everyone participating in the market to make the market act in a way that gives you what you want, right? So if the market is made up of all individuals like you and I, then you're expecting everybody that's trading in that market to do what you want and to follow through with your plan and to act the way you want. Well, the hard reality is when you trade and you make money, you're taking money from somebody else. So if you think about it that way, there's no way you can expect the market to act in a way that gives you what you want, right? You're not just, people aren't just going to be like, oh, you want to win this trade? Okay, here's my money, right? Nope, it's not how it works. Losing when you expected the market to do something different from what it did will tap you into the same childlike feelings of pain, anger, resentment, and powerlessness that all of us felt when someone took something away from us, didn't give us what we wanted, or wouldn't let us do what we wanted, right? So going back, right, the structures, that vase, right? When we were a baby, we're going to go touch that vase or try to go grab that toy, that shiny object. And we're told, no, we're not getting what, we're always told no, right? Can't do this, you can't do that. This is essentially the same feelings that the market can produce when it doesn't give us what we want, right? So this is why we can't have an expectation. We can be confident, our attitude and belief, right? Confident that we're gonna have a winning strategy, confident in the trade, but we can never expect, that we're always going to win. When you have those expectations is when you start damaging your mental. And this is when you start getting anger, resentment, and you feel powerless. When actually you have all the power, right? You are the one that enters the trade. You are the one that exits the trade. You are the one with the power. You have the responsibility. It is nobody else's. So can you see how, trading will really does a number on your psychology, and you can see how a lot of people, can fail in trading, give up and not be consistent. Is because everything we're taught, how our psychological works, everything we were brought up on, the market isn't that. It's not society. And so we relate these things to the market, which causes us to have these negative thoughts, negative attitudes, and be consistent losers. So we have to, separate the two and understand this is a completely different psychology. When you trade, it's not going to be the same as everyday life. It's going to be a little bit different. And this is why, a lot of people, it's hard to understand because, when you're brought up for so long a certain way, it's hard to understand this other way of thinking when you trade. Good thing we are reading this book so that you can change that thinking. From the market's perspective, each moment is neutral, right? The market is neutral. To you, the observer, every moment and price change can have meaning. But where do these meanings exist? The meanings are based on what you've learned and exist in your mind, not in the market. So when the market moves, the price action, all of that, that's not the market giving meaning to anything. It's just moving towards transactions, right? It's neutral. It's just facilitating transactions between individuals like you and I. So those price changes don't have meaning. You are the one that creates the meaning for those price changes. You know what I mean? You're the one that creates and tells the story of what the market is doing that day, right? And this goes back to finding what works best for you, what trading strategy works best for you, and how you can interpret the market for your own best interest, right? It's not the market that gives you the meaning. It's you that gives the meaning to the market. If what you perceive in the market information is painful in some way, then you will naturally try to avoid that pain by either consciously or subconsciously blocking that information from your awareness. In the process of blocking that information, you'll systematically cut yourself off from any number of opportunities to enrich yourselves. In other words, you cut yourself off from opportunity flow, right? Although it may feel as though you're fighting the market or it is fighting you, the reality is you are simply fighting the negative consequences of not fully accepting that the market owes you nothing, and that you need to take the advantage of the opportunities it presents by yourself 100% and not 1 degree less, right? So if we perceive that the market is always causing us to lose, right? The market is always going against us. We're blocking out any kind of opportunity to have a successful trade or to be successful, right? Because this isn't the market doing this. This is how we perceive the market, right? The market isn't trying to cause you to lose or be painful or cause emotional distress, right? It is you that does that to yourself. So that is why you have to accept everything. And when you accept the risks and the consequences that come from trading 100%, only then can you see the endless opportunities the market gives you, right? So say you get into a trade beginning of the day and you acquire a loss. Well, you could look back and say, I FOMO'd into that trade. I didn't enter into it the right way. And now we can say, the market shit today, the market's turning on me. It's the market. Well, if you take a step back and you don't blame the market and you take responsibility for that trade, the market usually gives at least 3 major good trading opportunities throughout the day to take a trade. So if that first one fails, instead of blaming the market and saying, oh, it's the market, and, perceiving the market in a negative connotation, you can look back and say, I took, take the responsibility for that losing trade. That was my fault. I made the losing trade, not the market. And now there's no emotion. Now the opportunities have opened up again and are endless for you throughout that day to trade, right? Because now you can go take another trade from, you see the opportunity, right? You see the other opportunities in the market instead of having this negative connotation that the market is going to make you lose. So instead of like taking another trade to lose, you're like, oh no, that was my fault. And now there's plenty of other opportunities for you to make another successful trade. Whereas if you blame the market, then no matter what you do, it's always going to be the market's fault. And now there's no opportunities for you to win because it's the market, not you. But in reality, it's always going to be you. Learning about the market is fine and doesn't cause any problems in itself. It's the underlying reason for learning about the market that will ultimately prove to be his undoing. Right? So let me get some backstory. Besides in the mind, all right, let me go back right here. After winning with such ease and effortlessness, the abrupt shift to emotional pain can be quite shocking. Not shocking enough, however, to quit trading, right? Besides in his mind, the situation wasn't their fault anyway. The market did it to them. Instead of quitting, the great feeling that they experienced when they were winning will be fresh in their mind and will inspire them with a sense of determination to continue trading. So it's like when you start trading, you're winning, and then you experience your first loss. Obviously, that you don't know much about the market. And so you're like, well, the market did that to me because I don't know what I'm doing. So now you're like, oh, I got to get all these courses. I got to study all this stuff in order to be successful. Right? I think this path is what pretty much every single trader has gone on. I know it was for me as well. So now your determination to continue trading and success is to try to learn everything you can about the market and all the information that you can, because it's not knowing enough about the market, and the market was the reason why you lost. Only now you're going to be smarter about it, right? You're going to be smarter about the next time you trade. You're going to learn everything. You're going to put some effort into it and learn everything you can about the markets. It's perfectly logical to think that if we can win not knowing anything, they'll be able to clean up when he does know something, right? But there's a big problem here that very few, if any, traders will have any awareness of until long after the damage is done. Learning about the markets is fine and is not a problem. It's the underlying reason for learning about the market that will ultimately prove to be your undoing. As I said a moment ago, the sudden shift from joy to pain usually creates a quite psychological shock. Very few people will ever learn how to reconcile these kinds of experience in a healthy way. Techniques are available, but they aren't widely known. The typical response in most people, especially in the type of person attracted to trading, is revenge. For traders, the only way to extract that revenge is to conquer the market. And the only way to conquer the market is through market knowledge, so they think. In other words, the underlying reason for why the novice trader is learning about the market is to overcome the market, to prove something to it and himself, and most important, to prevent the market from hurting him again. But they're not learning the market simply as a means to give himself a systematic way of winning, but rather as a way to either avoid pain or prove something that has absolutely nothing to do with looking at the market from an objective perspective. He doesn't realize it, but as soon as he's made this assumption that knowing something about the market can prevent him from experiencing pain or can help satisfy the desire for revenge or to prove something, he sealed his fate to become a loser, right? Even though the knowledge has increased, you now find that he's developed problems executing his trades. He hesitates, second guesses himself, or doesn't put on a trade at all, in spite any number of clear signals to do so. It's all frustrating and even maddening because what's happened doesn't make sense, right? You did what you were supposed to. You learned, only to find that the more you learned, the less you took advantage of it. You would never believe that what you did was wrong by devoting yourself to learning, but you simply did it for the wrong reasons, right? You did it because you think that by learning, you think the market is after you. You think that it's because you didn't have enough knowledge in the market as to why you're losing. But again, it always goes back to your beliefs and attitudes and not about how much you know. Obviously, adding the two together is even greater, but it always starts with attitudes and beliefs. So, a lot of us lose and then we're like, we got to learn this and learn this and learn that, and now we have all this knowledge. And now we can't seem to trade at all, right? We can't seem to execute a trade, enter a trade, no matter how much we learn. And it seems that the more we learn, the worse we're getting at trading. That's because you're learning for all the wrong reasons. You're learning because you're trying to get back at the market because you lost, because you're revenge, and you're trying to conquer the market. When, like we talked about before, you cannot manipulate the market. You cannot control the market into doing what you want, no matter how much you know or have learned. Whereas in society, if you learn about somebody and know everything about them, well, guess what? Yeah, it becomes pretty easy to manipulate them, to control them. But when it comes to the market, this is not the case. And this is another way of where we take the psychology of that we learned and that we learn and use in the real world does not apply in the market. The market is not this. So we have to learn TA to execute good trades. Obviously, will help you, but you don't learn more and more to conquer the market. It's not about how much you don't know. It's just about your belief system and your attitudes. So again, there is no possible way to avoid losing or being wrong. Our trader won't sense these trading realities because he's being driven forward by two compelling forces. They desperately want that winning feeling back, and they're extremely enthusiastic about all of the market knowledge they are acquiring. But what you don't realize is this: in spite of your enthusiasm, when we had a carefree state of mind to prevent and avoid mode of thinking, we shifted from a positive to a negative attitude, right? So this way of thinking is a negative attitude. There is no way that we can avoid losses or be wrong. And it is a negative attitude because we are not taking responsibility. We are saying that it is the market's fault. We're putting ourselves down, saying that we don't know enough about the market and is why we're losing. So do you see how this is a negative? This is a negative thinking, right? This is a negative attitude. When it's not about how much you know about the market, it's about having a winning attitude. Learning more and more about the markets only to avoid pain will compound his problems, because the more he learns, the more he will naturally expect from the markets, making it all the more painful when the markets don't do their part. He has unwittingly created a vicious cycle where the more he learns, the more debilitated he becomes. The more debilitated he becomes, the more he now feels compelled to learn, right? So it creates this vicious cycle of like, oh, I need to learn more about the market. And now you think you know everything about the market, you know, all these candlestick patterns, things should go your way. You know the market, but the market owes you nothing, right? The market owes you nothing. And no matter how much you know or learn or study or do whatever, the market's not going to give you what you want, right? The market is neutral. It's up to you to get what you want. It is your responsibility to take the winning trades, to cut the losses early. And so this is where people, you know, I've been, or they jump around. Oh, I'm in this Discord. I went to this Discord, bought this course, watched all these videos, and I'm still losing, but I know so much. Well, I hate to break it to you. It's not about how much you know about the market. It is always about your attitude and belief system. So again, please take responsibility. And I'll end it with this from chapter 3. If you want to change your experience of the markets from fearful to confident, if you want to change your results from an erratic equity curve to a steadily rising one, the first step is to embrace the responsibility and stop expecting the market to give you anything or do anything for you. If you resolve from this point forward to do it all yourself, the market can no longer be your opponent. If you stop fighting the market, which in effect means you stop fighting yourself, you'll be amazed at how quickly you'll recognize exactly what you need to learn and how quickly you will learn it. Taking responsibility is the cornerstone of a winning attitude. And that is the end of chapter 3. So to summarize, a lot of things that we've been taught in our societal norms of our psychology, we cannot put that into the market, right? And how society has trained us in our psychology is what causes us to lose in the market. The market owes you nothing. It is neutral. We have to create a set of rules. We have to create a structure for ourselves, and we have to follow that, right? We have to take responsibility for why we win or lose. And we have to have a belief system and a winning attitude, and to trade without fear. Awesome. Does anybody have anything they would like to add? Any questions? I do thank everybody for coming on today. I know it is a Saturday, so really appreciate everybody for hopping on. If there isn't anything else, I really thank you guys for joining me on the first book club we had. Again, we'll be going over chapters 4, 5, and 6 next week. So go ahead and learn those. And I hope everybody enjoys the rest of your day. Happy Saturday and a good weekend. And we'll see you for Sunday's sermon on Sunday.
Thank you for doing this.
Yeah, no
Greatly
problem.
appreciate it.
Of
Thank
course.
you very much.
You're very welcome. Awesome. Of course. Awesome, guys. Well, enjoy the rest of your day. Go out, enjoy your families, your loved ones. That's what life is all about. You know, this is why we do this, you know, to enjoy the freedom. So enjoy yourselves. We'll see you Sunday to get prepared for the week. And we're going to have a killer week this week, right? Let's have that belief system. Let's trade without fear. We're confident. We know that we're good traders, right? We now understand the market owes us nothing, that we are responsible. We are responsible for being a consistently profitable trader. Awesome. Well, enjoy your day, guys. I will see you later.